going to be concentrate flying everywhere because you're in your initial stage one. I've got the map up here. You've got 6,000 tonne of it going to Eneabba, to Iluka. You've got 12,500 tonne going to your Kazakhstan downstream. But is stage two then all up for grabs?
It is very open, but one Chinese discussion this week, Matty, they want 75,000 tonnes. So the demand within China is there.
This is general advice and my opinions only. This episode's company has paid me for this interview. I may be long, short, or hold an interest in stocks or CFDs mentioned. Past performance isn't reliable. The interviewee's views are their own, not necessarily mine. LEVRD operates as a corporate authorised representative 00131 8377 under AFSL 548573. You can find our financial services guide via the LEVRD website, link in the show notes. Righto, bag holders and stop loss owners, we're heading down the rare earth territory. And I'll tell you what, this bloody Linus MP materials with the big dogs, but tell you what, old Lindian's just come out of the blocks. And I've got Zac Komur on from Lindian. And mate, tell you what, this slide says it all. You went from this Malawi project to now getting this Kazakhstan asset, and it has completely transformed what Lindian is. Welcome to LEVRD, mate.
Thanks for having us, Matty. Yeah, great story at Lindian. Executive Chairman Robert Martin and I, Executive Director, were approached by major shareholders early last year. We've kind of come on board and reshaped an exceptional asset in Malawi. It's a 300-year mine life. We've transformed it, got an Iluka and offtake agreement and more offtake agreements to come, and called final investment decision late last year, and construction is underway. We have over 800 personnel on site at the moment, ticking all the boxes and the milestones to get into production this year.
Yeah, very good, mate. So we've got upstream, we've got downstream, and I want to talk about all of it. So the original Lindian, as if people don't know, was their Kangankunde. Is that how you pronounce it?
Kangankunde.
Kangankunde project in Malawi, and then you've obviously just done this deal with the downstream processing plant in Kazakhstan, and I want to get into both. So we'll start, but firstly, what's the real prize in rare earths here? Is it the producing your mixed your monazite concentrate, or is it the downstream, or is it the ex-China side of things? Where's the focus here, or is it the whole thing?
It is the whole thing. The key to it is being on the lowest cost quartile when it comes to the cost curve. We produce a concentrate at $30 a kilogram of NdPr. As miners, we all know we are price takers, and the only thing you could control is your cost. So we are the lowest cost producer when it comes to producing a concentrate. And that's just due to us operating in a very low cost jurisdiction like Malawi. And the strip ratio in the mining is 0.2 to 1. And we've gone owner operator as well. That's reduced the cost further. And then when you look at concentrate, you get payabilities from 40 to 60%. Then when you go to an MREC product, you get payabilities from 70 to 80%. And then when you go downstream further into oxides, you get 100% payability. So it is a trade-off on all that. But the key to it, Matty, is your all-in sustaining cost. And we're kind of safe to say that from mine to MREC, we could go to $35 a kilogram of NdPr.
Yeah. Okay, so I'll start at Kangankunde, how that is in operational ramp up and scheduled sort of end of this year, front end commissioning started. Yeah, it's going to be producing a monazite concentrate, within the next 12 months. How's everything tracking along there? You're digging dirt, it appears.
Yeah, the mine's fully progressed. We've got our own Komatsu fleet on board. Mining is underway. Yeah. We're scheduling our first blast in late June, and the mining minister will be on site to press the button on the first blast, which is great. But due to the great strip ratio, the guys have already started building the raw stockpiles, and that fleet's also being used on our TSF construction for stage one. So full steam ahead, over 800 personnel on site, construction underway, hitting all the milestones. It is kind of doing both, getting a project up and running, a company up and running, and also a downstream facility up and running in Kazakhstan. So or more than 70% of my time's traveling and through various jurisdictions, be it offtake agreements or Malawi or Kazakhstan, to kind of pull everything together.
Yeah. Yeah. So, and look, because the Kazakhstan deal is probably the big transformational thing we'll get into, but this project like Malawi, talk to me about the jurisdiction. We've seen, Lotus have a lot of issues there recently in ramp up. I'm sure that's attributable to a lot of things. Talk to me about the workforce and I guess the reliability on side of executing just the upstream component to get this monazite concentrate. What are going to be your biggest challenges that keep you up at night?
Yeah, great question, Matty. Malawi is the third poorest nation in the world. It currently exports nuts, tobacco, and tea. The current administration is all about pro-mining. Lotus is gearing up with their ramp up. They're operating in a refinery. They need sulfuric acid to produce their yellow cake. We don't have those complexities within our flow sheet. We're building a Beni plant. Mining is only 500,000 tonnes per annum. We operate mining during day shift only. Our flow sheet doesn't require any chemicals. It's just crushing, screening, gravity separation, magnetic separation, and we produce a very clean concentrate, which is very low in uranium and thorium and doesn't require dangerous goods class 7 shipping requirement. It's a very clean product. We feed the mill about 3 to 3.6%. We've high graded the first 1 to 5 years, and we produce a 55% total rare earth oxide concentrate at premium quality, and of that 20% NdPr. There is some heavies in there, but at small amounts. But Malawi is an exceptional jurisdiction. They got mining legislation on board, kind of UK law, francofied law when it comes to it as well. And just the approvals process and the support from the administration is second to none. So, for example, Maddie, going from our stage 2, which is fully permitted now, to go from an EL to an ML took us 5 weeks. Normally in the Western world, that could take 7 to 8 years. So very prudent approach, very transparent, and you're basically walking through these permits, be it for the explosive magazine, mining permits, or water bore permits, or EL to ML or ESIA permits. They get on with it, they understand the value, and they deliver. So it's great to be operating in Malawi, and it's a very low cost jurisdiction. I guess when you look at the Western world and operations in Australia, I'll come to the floor price, but that's why you need the floor price to help incentivize some of these operations from starting up, because our all-in sustaining costs for Malawi is $30 a kilogram, but other assets, they need that floor price to get into production. And it's somewhat of a poison pill for us, because it helps incentivize projects from coming online when they shouldn't. You should really stand up on your own 2 feet when it comes to an asset.
Yeah, and just a comparison of the scale here. I'm just looking at your stage 1 and stage 2. So stage 1 and 2's for FID targeted for end of this year for stage 2, and that is for 120,000 tonne per annum of total rare earth oxide concentrate. Now, is there this is probably a question without notice. What's the comparison of output there for that 120,000 tonne compared to a Mount Weld or a Mountain Pass? Is it on a size-wise of NdPr?
Great question. The stage 2 will be on comparison with the majors, Maddie. Stage 1, we've debottlenecked it. It was initially earmarked for 15,000 tonnes per annum. We've upgraded the circuit, so we're getting 20,000 tonnes from stage 1. Stage 2, the DFS is underway with DRA Global. We've cracked the code on the flotation test work there and the reagents required for stage 2. Yep. And the reason why we have to go flotation for stage 2 is the gravity circuit alone for stage 1 comprises of 20 shaking tables and 10 MGSs. So when you look at order of magnitude on a 5-fold increase, you won't go 100 shaking tables, you go to a flotation circuit.
Okay, yep.
So DRA Global, who have done extensive test work with and the studies at Mount Weld's flotation circuit and the upgrade there. So we're working closely with them. That DFS will be completed in December, and we should call final investment decision say late this year or early next year, and then get construction underway in 27 and into 28 for stage 2 and production late 28. I was saying that the team commissioning and ramp up always happens during Christmas, which is going to be the fact for stage 1, and it will probably be the case for stage 2. But the volumes for stage 2, it's kind of us speed to market and to own the market share as quickly as possible. Our goal is to have 15% of the market by 2028 by the volumes, because we do have an exceptional resource. Stage 2 drilling is complete. We're just waiting on the assay, so we'll get a resource update come July to help with the stage 2 DFS. But full steam ahead both on stage 1 construction, stage 2 DFS, and getting that market share. And the volumes I'm in China at the moment. The volumes we are considering after looking at stage 2's volume output, we could actually produce more based on the market demand for the product. And we do see a major growth in the sector. There's a 8.2% compounded annual growth rate when it comes to the sector on NdPr. And the good thing about China is that they have a use for all the rare earth basket, not just the NdPr or the DyTb that's used in magnets.
Yeah, okay. So, and we'll get into, and I assume there's going to be concentrate flying everywhere, because you're in your initial stage 1. I've got the map up here. You've got 6,000 tonne of it going to Eneabba, to Iluka. You've got 12,500 tonne going to your Kazakhstan downstream. But is stage 2 then all up for grabs effectively? And maybe we'll get it when we get into the Kazakhstan side of things. We'll see like what obligations they have for the product, or is it pretty open at the moment?
It is very open, but like one Chinese discussion this week, Maddie, they want 75,000 tonnes. So the demand within China is there. There's a lot of latent capacity thanks to our peers at MP shutting off feed to China, as well as Serra Verde, which was purchased by USA Rare Earth. So they're all going the US route with stockpiling into Project Vault and getting up a supply chain in the Western world. So there is a lot of latent capacity in China, and we could quite easily sell the product into China. And also still in discussions with the Western world. We did get an offer for an offtake from the US. It did come with handcuffs, and it did constrict what we could do for the organisation. So we didn't take the US offer, which was quite. We weren't looking for a sugar hit in Lindian, because we could have quite easily come out and announced the US offer, but offtake agreement. But as part of that, it reduced our flexibility into the future, and all the deals that we are looking at for offtake agreements, Maddie, we're always thinking long term. And the Iluka deal initially started off not so favourably, and that took months to get across the line. But it's now 6,000 tonnes per annum to Iluka, and it's a 15 plus 15 year deal. And Iluka's also earmarked to take 25,000 tonnes from stage 2.
Yeah, right. Is that just non-binding, or yeah?
No, it is binding as part of it.
Stage 2, yeah.
They have for stage 2, and commercial in confidence on the actual on the thresholds that need to be met from Iluka's side on that. Yep. So, but they're earmarked for 25,000 tonnes per annum. The Iluka Eneabba refinery, great asset. It's good to kind of see something being built in the Western world to kind of decouple from China, and it requires 55,000 tonnes per annum, and they've got their stockpile there from the mineral sands days, but it's all about supply security for Iluka, and we provide them with a very clean concentrate for that refinery.
Mate, the Kazakhstan deal, the Sereko Hydromet plant, apologies for any pronunciations here, but correct me when you need to. The Hydromet, you've gone into a JV, 51-49 with a local partner for US $15 million for a Hydromet plant. How did it come across your table? First up, where'd this the last place you'd think to look in mining rare earths in Malawi would be bloody Kazakhstan, but obviously you did.
No, great point. We've been working on the Sereko deal for over a year now, Matty. Since we joined, we were approached by the Kazakh government. Kazakhstan currently supplies 27 of the 54 critical minerals to the US and the Western world. And for Kazakhstan, it's all about garnering favors with the Western world to help somewhat protect them from Russia and be seen as the next kind of stepping stone when it comes to rare earth production. It's an operating facility, used to be owned by Kazatomprom and Sumitomo. It used to process mined tailings from Kazatoprom's uranium facility.
Okay, that makes
sense. It contained high uranium and thorium levels within that product. It used to produce an exceptional MREC product. It didn't meet the specifications for Sumitomo's Japanese market. They ended up selling that MREC into China, making quite hefty profits because there was a fair bit of heavy rare earths combined within the tailings from Kazatomprom. So Sumitomo ended up walking away. So we have a facility that's on care and maintenance. Been to the facility numerous times. We're currently going through a detailed DD, be it legal, financial, and technical. And after China, I'm flying out today to Kazakhstan because there's some exciting news there. Hypothetically, we have access to heavy rare earths that we could feed and start up the refinery before Malawi comes online. So we're currently working through that. So it gives us a lot of options. So with the stage 1 feed, if we do have some hypothetical sources for heavy rare earths to feed through that Sereko facility, then it gives us option of sending stage 1's concentrate elsewhere, or be it blending with other feeds that we could get into the Sereko facility. But it's a sulfuric acid process, a conventional process. We've done extensive test work with ANSTO and the Sereko team. We're getting over 99% recovery. Great facility, everything's in place, be it logistics, sulfuric acid at $100 a ton, which is three times like when we're looking at Australian sulfuric acid costs is about $300 a ton. And we have sulfuric acid supply security because China has just banned sulfuric acid exports. So it is all coming together, Matty, and quite excited to get that Hydromet plant up and running.
Yeah, so will you be sort of, because I've seen all the issues Kazatomprom we've had with sulfuric acid and because it's a big farming district over there, are you sort of classed in the same bucket as Kazatomprom with priority to sulfuric acid, or as you said, you've got that secured already for your scale?
Yeah, we do have it secured.
Yeah.
We also have access to a new sulfuric acid plant that's starting up that produces 50,000 tons of sulfuric acid. We only need 10 to 15,000 tons for full capacity at Sereko. So everything's in place regarding sulfuric acid and all the reagents for cracking.
Yeah. So your local partner there, RA, abbreviated, you're 51, they're 49. Can you explain the revenue flow? So for stage 1, for instance, so 12,500 tonne per annum of monazite concentrate goes from Kangankunde to your Kazakhstan plant. Does the JV buy that concentrate off Lindian and then you share the revenue on selling the mixed rare earth carbonate after that?
Spot on, Matty. As part of the deal, the JV buys the concentrate.
Yep.
The great things about the terms with the Sureco deal is Lindian has full control of the pricing for that concentrate. It has full control of the operating facility. It has full control of the marketing rights for MREC. We have set up an office within Singapore for marketing our product as well, through to the Western world. Also did the rounds in Europe, which are very much interested in our MREC product just due to the very low radionuclei. So we do have full control, and the discussions in the early days was that it is really a government friendly that's on board as that partner, and it is really just to kind of see a Kazakh partner being on board. Early discussions were 25% for that partner, but as a free carry, but we ended up settling on 51.49. But we do have full operational control when it comes to it, and we'll be sending the JV the bill for the concentrate.
Yeah. So, and what determines that transfer price of the concentrate to the JV? Is it market referenced, or is it commercial in confidence? How does it work?
Yeah, it will be market referenced. It will be working with our Kazakh partner to kind of work through that as an offtake agreement.
Yep.
We do have an offtake agreement with Iluka. These days, I guess, not be at a floor price in the Western world, but you do go off the Asian Metals Index when it comes to the basket price. So we'll be working through that, and then the key one there is payabilities, and we get great payabilities just due to our low impurity product that we produce. So it is working through that. But if you were to look at Lindian's overall revenue at the holdco, it does provide dividends for us based on our MREC sales, because greater margin you get from the payability going from a concentrate to an 80% payability in MREC.
Yeah. Okay. So, and then if we're talking, if you do announce FID for stage 2 at Kangankunde, does the cracking and leaching plant need to be then upgraded? And if so, is that revenue split, does that maintain for no matter what size of how much mixed rare earth carbonate that you're selling between you and the local partner?
Yeah, we are actually looking at ramping up Sureco. There is available land that's fully permitted. And hypothetically, Matty, as well, something on the cards is further downstream into oxides as well that we are working on in country.
Yep.
Something we are looking into. There is a already permitted facility there. And one thing that I'm seeing this week when I'm on Friday, when I'm back in country to kind of go through that facility to look at potential downstream oxide production. So we are looking at all options and also access to other feed sources within Kazakhstan, which has heavies in it. So ultimately, a lot of optionality. We are just kind of doing our homework on all options and then bring it forward and assessing, like our offtake agreements as well. We have multiple incoming offtake agreements, and we are assessing each one and doing what's best for the company and value.
Yeah, I could say there's been a lot of hurdles, a lot of boxes to tick on this one. I guess for the Sureco plant and the deal, is there anything that still needs to be finalised, and what are the big things to finalise if you do expand in terms of the commercial agreements? Anything need to close still?
We are just finalising the legal, financial, technical, and environmental DD.
Yep.
No red flags at the moment, Matty. Just basically working through the paperwork there, and that should all be wrapped up soon, and we could announce that. And then it's just really getting on with it, exciting opportunities if we could kind of hypothetically pull off this additional feed of heavies in country to get that going before Malawi feed is online. So it is really just full steam ahead, both in Malawi and Kazakhstan, to kind of get everything into production as soon as possible.
Okay, so like its original purpose it was being used for is completely applicable to producing a mixed rare earth carbonate. Is that right?
That's right. It used to take feed from Kazakhstan's tailings to produce a mixed rare earth carbonate.
Okay, gotcha. Yeah.
We are going to spend some money there to get some preventative maintenance measures on board with the team, but we have 150 personnel in Kazakhstan as a workforce, and just really going through everything there, Maddie, on the asset register and just ensuring we're ticking off all the boxes.
Yeah, yeah. So where do you see, I guess, your biggest, now that you're going to be vertically integrated, where do you see your biggest processing risk? Is it going to be the concentrator at Kangankunde or the Hydromet facility in Kazakhstan? Where do you think based on what Linus have done historically, what Mountain Pass has done, like what's going to be the big ticket item, do you think?
Great question, I guess. Malawi is such a simplistic process. I'm somewhat impatient and keep cracking the whip with the team when it comes to the schedule. So it's full steam ahead on site. It's a proven beneficiation plant, great recoveries. In Kazakhstan, it is probably providing some lipstick to the facility, but it's working with the Kazakh team there and getting the right people around it. I think personnel are key, Maddie. We have an exceptional workforce in Malawi. Over 80% of the workforce is from Malawi. We have expats on board, and I thought that the Australian FIFO roster was bad, but our expats are on 8 weeks on, 3 weeks off in Malawi.
Jesus.
and there's a 95-man camp that we've built, and it's fully operational. So full steam ahead in Malawi. It's really just getting on with it and delivering. I'm a passionate operator. So once we are in production, for us, it's all about, okay, we're a low-cost producer. Where else can we actually optimize, and what other options can we do to increase production at these assets? And then it's all about margins and how do we increase margins for both assets.
Yeah, interesting. Just looking at I think this is probably not fully updated on Market Index, your substantial shareholders with, Regal, L1. It looks like you've tightened up the register a lot since you've come on board. You got some big instos holding some big chunks of it.
Yeah, great support in the early day. There were no institutions on board, so we have some very great institutional backing, Maddie. Thanks for all the shareholder support out there. We are getting on with it. Some of our offtake discussions do take time, and shareholders are kind of wondering, why haven't we signed more offtake agreements? But there's a great analogy. We're like the prom queen we're the prom queen at the prom, and it's who do we dance with? So we want to ensure that we dance with the right party for the long term. And the Iluka deal is part of that, picking the right partner. And we did get a US offtake agreement, but it tied us up in handcuffs. So we are looking elsewhere. But we're seeing a lot of incoming requests, be it from Japan, India, Thailand, Estonia, France, the US as well. We understand, like, being in discussions with the Project Vault team in the US. There's somewhat what you read in the paper regarding Project Vault, and what you actually see on ground is chalk and cheese. They are trying to get their ducks in a row in the US as well. It's a bunch of army guys, Maddie, that have money, and the US have kind of come out and said to us, they agree that the $110, 110 kilogram floor price was the wrong thing to do, and they're kind of just thinking in the short term, be it mid-terms, when it comes to some of these discussions. But when you look at Chinese discussions, they're thinking into the future. I would always say that one good thing about the Communist Party in China is that the strategy stays for 30 to 50 years and they get on with it. But in America, it's really knee-jerk reactions on the next election. So we do kind of see that floor price in the US as a poison pill, because it helps incentivize other projects from coming online when they shouldn't. But we do also understand that it's required to help prop up a Western supply chain and decouple from China, which the Chinese SOE companies have done as well. So Chinese government have supported them in time as well. But when you do have projects, it always comes down to the ore body as well, Maddie. We're very low in uranium and thorium, and other projects, be it like Arafura near Alice Springs, they need to go all the way to oxides to remove their uranium and thorium. And we also heard that Andrew Forrest and the Walu team are trying to get out of Yangibana as well, which is a high cost operation. That's why these kind of $110 floor price is required. I think in the Pilbara we pay a truck driver $250,000, Matty, to drive trucks. But in Malawi, it is a very low cost jurisdiction, and it is the jurisdictions that you pick when you're operating it, and your all-in sustaining cost is key.
Yeah, interesting. I guess if you don't go down the path of producing oxide in Kazakhstan, which means you're really separating the technical mining term, separating the crap out of it from being a mixed rare earth carbonate. If you don't go down that route, can you effectively only sell that to mostly China anyway, or who else can process that in the world that's ex-China that would want it?
Yeah, so we met with the European Union. They're doing something similar to Project Vault, but they're also trying to align their docs, because they have 27 member states that they need to kind of get across the line. They're very much interested in a Project Vault style to secure the feed, but there is existing oxide separators within France and Estonia. I won't name them, Maddie, but you can kind of connect the dots that we are in open discussions with. And the good thing about our MREC product from Malawi, it's very low in uranium and thorium. It meets the thresholds. And the key one that not many other rare earth players raise is actinium-227. It's a naturally occurring radioactive isotope with a half-life of 22 years. And it ends up not leaching or cracking through the MREC process, and it ends up within your rare earths. And the only way you could remove it is if you put a solvent extraction step in, which ends up removing the lanthanum with it, which is capital intensive, up to $50 million. So we don't need that additional capex just due to our very low radionuclei. So it's a very clean product. But in saying that, our concentrate feed is predominantly NdPr, and we know that the Europeans are chasing DyTb. But the DyTb market in magnets has also evolved over time. Maddie, I was just at a magnet facility in China, and DyTb use in magnets went from 8 to 12% in sintered magnets down to only 0.5 to 1%. And they literally, when they produced a magnet, they add NdPr, iron, and boron, which produced a magnet. And then the DyTb, which ends up helping with its heat resistivity, is basically screen printed onto the magnet. So very, very low quantities. It was quite interesting. There was a story where a car OEM ended up going to look back into the magnet from a class action, and when they went into the magnet, they looked at the magnet properties and it ticked all the boxes. But when they broke it down and looked at the DyTb within the magnet, it was only at 0.5%. And then they said to the magnet manufacturer, I thought this was at 5%. We're paying 5% in DyTb, but they've reduced it over time just due to progress. And being at the 17th annual Rare Earth Conference in China, there are constant evolution when it comes to magnets. Guys are looking at different additives to kind of help remove reliance on heavies and rare earths in particular, and also looking at different aspects, be it cobalt addition and the like, to kind of help with better resistivity on the magnets.
Yeah, right. There you go. Have you learned all this shit since you come into Lindian, or you had a bit of prior experience?
No, picked up rare earths quite quickly, Matty. And another one that I'll kind of help share with you is in Malawi, we have a hard rock rare earth deposit. And when you see rare earths and the geology, it always starts from a hard rock deposit. And over millions of years, that weathers, and then you get the monazite sand deposits. So you kind of see the mineral sands world, where they produce a byproduct of monazite sands, which the Eneabba refinery does have a stockpile of monazite sand. And over a million more years, when it weathers further, the cations on the 16 elements in rare earths end up adsorbing onto clays. So then you get the ionic clays. So it's just a weathering process over millions of years from the hard rock into the clays.
Yeah.
I must say, like clays. So in China, they come across a clay deposit. They pump sulfuric acid into the clay deposit, and they collect a residue at the bottom, and then they precipitate an MREC product. What others are trying to do in Brazil is somewhat make that friendly. So what LEVRD does, they mine the clay and put it into vats, add leaching product, and then filter cake out the MREC product. The cost of that is quite astronomical. Ionic clays, I believe, are only economical when you do in situ recovery.
Like BCM, I think, Brazilian Critical Minerals. That's
BCM,
one they're proposing.
Exciting stuff there. I have operated in Brazil previously. It's just, it takes time when you go through permitting. But we don't foresee within the market anyone coming online for the next 3 to 5 years, Matty. They're working through permitting and capital requirements. They are looking at garnering favors with the Western world on the floor price, and they need to be incentivized to kind of get these projects up and running. But now Brazil is also somewhat looking at nationalizing their assets as well, and they're now scrutinizing the LEVRD USA rare earth deal.
Yeah, I saw that.
So President Lula is part of BRICS and is kind of siding with the BRICS nations, and I guess they're coming up with an election as well. So it is somewhat geopolitical, but yeah, that's the rare earth geology as well that I've learnt over time.
Very good, mate. No, thanks, Ed, for that. Tuning in while you're in China. That was a great overview of what you're up to and the rare earth market, and I think everyone's going to get a lot of value out of that. So I appreciate it, mate, and enjoy jet setting around the world.
Thanks heaps, Matty. Yeah, it's not really jet setting. I guess I've probably spent 80% of my time this year so far just on the road. So it is really getting off our bums and actually doing the work. So a great example of this, Matty, is the initial DFS for Kangankunde in Malawi had us going to contractor mining. We did a trade-off study and we said we could save 30% OPEX in mining alone. And then we could, if we were to purchase a fleet, we could use that fleet to build our TSF, which would have cost us $7 million with a contractor. Once we looked at that, Rob and I made the decision on the spot to go owner-operator. The next day we were having a chat to Komatsu and Caterpillar, and we traded off offers both on them, and then we went through Komatsu that week. So we got the order and we made the decision. So very streamlined approach. Everyone within Lindian, full steam ahead. Everyone knows what to do. Decision making is so quick. So Rob and I are the board, and there is no middle management on board, and we kind of gives us the luxury of moving quickly and making decisions. I've worked for Fortescue, BHP, Inpex, and others. And when you work in big companies, Matty, decision making is key, and the time it takes to make decisions is key as well. So getting on with it is key, and we're just cracking the whip to get both Malawi and Kazakhstan into production.
Good stuff, mate. Nah, well done, and mate, thanks again. Yeah, I've learned a bloody shitload. Hope it all goes well. That's all we can say. And I'm sure you do as well. Cheers, Zac.